This conference will now be recorded.
Hi everyone, it's Patrick, and you've got my position. It's the 23rd, and we've got Beat in the house. Hi Beat.
Hi Patrick, how are you?
I'm very well. Let me just get my stuff together. Here we go. Great. Well, what a week. What a week it's been. Tough to trade anything Brexit wise, but I've got some topics and we'll go through them. We had a little chat offline, but I'm keen to just get as much of our thoughts and on record for you guys to pick up. The first sort of thing I'd like to talk about is the Fed and this talk of really quickly the neutral rate. Talk that it's 2.75 should hit March 19. This week we've got the big meeting. Slam dunk on a hike for the target to be 2% to 2.25. But for me, it's all about the pause and any indication that JP is gonna, how long is that pause basically? So that's what Bloomberg's have been sort of mentioning it. I know on the retail side, Forex Live, I mentioned it a few times. I haven't seen anything out on Reuters, but I guess I don't know if that's starting to get a bit of price in after the miss on core CPI, 0.2, but it's certainly something on that could be mentioned on Wednesday. What do you reckon?
Yeah, to be honest, the if you looked at all the Fed speakers, some of them, even some of the hawks, they are the Uber hawks, which obviously are very comfortable hiking rates with the current sort of economic data. But I think it was Evans, and I think a second one, which I can't remember who it was, but they almost sort of made the point of, there's a little bit more room in the economy. So
they're talking about being hot. It's okay to be a bit hot.
Yeah, and the reality is, yes, we had the core CPI miss, and I think, euro was 116.20 when we missed that. It's 117.50 now, so we can actually argue whatever the reason was for the dollar sell-off, but part of it finally may have come through from that sort of thought that the market, we gone like from 50% to 70 after average earnings, and I would reckon we're back at 50-ish after CPI, which I think is probably about right to be 50-50. To be honest, it starts to look like, I read an article today again about the long-term trade war with China. So people, familiar with the situation on the trade issues are actually prepare themselves for something that will last years. That doesn't mean like Trump is going to raise tariffs every day or, like the silly stuff, but there will be no solution between China and the US for years, is what some start to predict. If that is true, then, and I actually can believe it, because if Trump is serious in one area, it's China. China is the sort of big topic he has. Yes, his hardliners, the two hardliners he listens to, they are just, they're just against the way China is dealing. And even I think one of the Fed FOMC speakers we had last week actually made a comment about what's going on with the sort of trade talks or trade war, and even he sort of had to agree that some of the Chinese practices in the past maybe isn't right. So I think we will get Mexico sorted. We eventually get Canada sorted. I would assume we probably sort Europe out. But I think the China thing will be here to stay. And therefore, I think for the Fed, at some point, as we both know, it's not a one-way street in terms of pain. It's a two-way street. And whether it's the agriculture side or some of the other, I think China introduced some tariffs on the energy side. Maybe there is a time when the Fed has to just pause and watch right? And I think the odds for December might actually reduce. So I actually switching to the view that we might actually pause in December. They may not even pre-commit. So I think if JP is smart, he will he will talk his way, a bit like what the Bank of England has done, sort of data watch, or like something that sort of tells us, what, they are not on a pre-committed path, which I think has been until now, and maybe going forward, it's not going to be pre-committing. It's watching data, watching, the effect from the trade war, is watching this, watching that, and I guess he might just give us a list of things to watch just to confuse us, or confuse us to the extent that, signals that December is open. I don't think they're going to take December off the table. So I don't think it's going to be that easy that he's taking it off the table. It's going to remain on the table because, we still have October, November to watch data, really. So it will be to take it off the table. But I do think that he's not going to rev up for December. And so the market might get just the idea, you know what, it is 50-50, it stays 50-50. And if the data, data recently has been a little bit mixed, not bad, but just mixed or cooling off. Maybe there is no need to just go in December. So I start to believe that December they're probably going to pause.
Good stuff, B. I mean, my take is there's always that line, that rhetoric from central banks that say data dependent, every meeting's live, we've got risk events, we've got geopolitics events, all that kind of stuff. And it basically pushes out the responsibility from themselves. They're not in the corner, they can't, they're just giving them a bit of can kicking, really. And it's logic, it makes sense. If data supports it, then yes. But so that makes sense. I mean, I think with December, it's going to be tricky. I think the macro picture has just been punched on the nose in the US. It was largely pristine before. I just didn't like core CPI off 2.2.
Yeah.
And if we get another bit of hard data, like a miss on wages, we would beat on wages, which is great. We get a miss on, or something fairly big, like a GDP or wages or some bit of hard data, then questions are going to be asked, I think, on the path.
Yeah. To be honest, the other thing is, and I had a lot of discussions with various people last week, some of which are real hardcore macro people, which, and I chatted with them about my view on the euro. And my let's say last week it was more a gut feel than anything else.
Yeah,
the euro is
way.
Going up, and the dollar is just going to have a hard time. It's sometimes those people forget, and that's where, the sort of gut feel from a trader is probably at times as important as maybe macro is. That, we have made no progress on the dollar in the last several months, quite frankly. We had the best, we had a dovish ECB that took us from 118 to 115. We had the quick shock to 113 on the back of the crazy night in Turkey and the few crazy days that followed in emerging markets. But ever since, we traded 118 on Friday. So we nearly sort of closed that sort of ECB circle. We had like rate hikes from the Fed. We had good data from the US. We had a dovish ECB that is now slowly changing, not hawkish, but just we're another few months closer to the first hike probably in Europe. So suddenly it feels to me, and that's probably where the sort of gut feel came after the CPI miss, is that we have chucked a lot at the euro. We have really tried to take the dollar up, and quite frankly, we haven't really made much progress. And there's a silly old saying in trading: what doesn't go down has to maybe go up.
That's right.
And I know it's not a scientific explanation, but you know, as much as I look at macro and charts and this and that, but reality is watch at price action as well. And price action has been poor for the dollar all last week. It got a little bit of a relief, not, you know, not for its own reason, but because we have all these issues in the UK, and with the sort of suddenly going from a Brexit honeymoon back to a no Brexit or whatever we do. And cable, the turn in cable was probably really instrumental for taking a little bit the steam out of the downside of the dollar move from last week.
Yeah.
And like I said, we said off air before, I think euro would have probably closed near 118 if we didn't have that turn in cable. So that now, where we closed in the euro just around 117.50, makes next week a little bit tough in terms of still believing in this turn high in the euro. I'm not just going to give up on it. A breakthrough 117.20, and let's say a daily close below 117.20, I might just have to review. So my euro longs currently are still, I have not yet moved into the macro basket. They are still in the more shorter term basket. Because I know we are at a critical junction, so it would be too early to shift them into a macro book. I would need to see a little bit more progress, and the close on Friday was just too much, just on the edge to have a full confirmation. But it's still what I'd be looking for next week. Despite we have the Fed, we're gonna have the Fed hike, which is fully priced. We have the Italian budget coming, which, you know, you will probably say more about that afterwards. So we have a few risk factors that could sort of lean onto the euro. So I'm well aware of that, but I'm still, strange enough, and you know, after being short all of 2018, it's a very strange thing for me to say, to be long euro and trying to stay long euro, right? I have a few indicators on my charts I'm watching, the DMIs and the ADX, which is just turning. And that, if that's, I need a few more days to confirm that. If that's the case, I actually think the euro goes up to 121.5, 122 next. But again, I will talk about this in a few days' time. It's been too early on Friday, just after this sort of first move now.
Yeah, it's interesting, isn't it? I mean, I guess we've got CPI on Friday, expectations 2.1 year on year, core 1.1. You know, I do get a sense technically, you can see the euro dollar daily here. Technically, you know, we've just got a lot. You mentioned these two levels, amazing levels for me as well, 20 and 50. Just the way I saw cable come off on the 1:45 London time announcement from Theresa May, I'm seeing euro dollar come off as well. I guess I've got more optimism for a long on euro dollar, only if we stay above 20.
Yeah.
And I just feel that you could say it may come down, be really painful for those longs and kiss this 100-day moving average. But I'm not, you know, I'm out by then, because the thing about what I tend to look at, you've got these lovely levels. It's been in this range for so long.
Yeah.
When it breaks, I was disappointed it didn't go on a bit more, but that's markets, as you know. But if we do stay above this 20, we should have another go at 50 really easily, and then we just need to have a proper close without any headlines. Thank you very much.
Yeah. What I see is as well, because I'm watching the Bollinger Bands as well. So I already knew on Friday that it's not going to run away on the top side. I think that the daily top Bollinger Band was 1770. So
Okay.
That's why I sold half my longs at 118. Because
Sure.
the daily Bollinger Band, not, you know, you can't use it as a resistance or support or whatever, but it always reminds you. Because funny enough, even over years and years and years of history, yes, we had the odd day where it may have overshot 80, 90 points intraday, but even then it would stall, come back a bit, and wait for the band to catch up. but the average break is never more than 30 to 50 pips. So if you see 118.05, you see already the move a bit stretched. So that's why I think if the euro is going to go up, it's going to go up in the euro dollar fashion, which is it's going to grind up on the top of the Bollinger Band, looking toppish every day. It's coming off a few, 30, 40 pips.
Yeah.
Most of the people will just be too scared to buy it, and it will look toppish every day. And it's, in 4 weeks time, 5 weeks time, you look back and it's like 200-300 points high and go like, Jesus Christ. But again, next week is a big test for that view, because there's, like we just said, we have Italy, we have the Fed. We still, to be honest, depending on what's all coming out in UK politics, if cable gets like absolutely run over, it'd be nearly impossible for the euro to really accelerate a lot.
Yeah.
It may just hold in, a little bit lower. Euro sterling is going to go up. And we both know euro sterling can't go up every day like 100 points. So there's a limit how high the euro can go if cable really gets it. But yeah, so let's say it's the early stage of a new position for 2018 for me. I'm still very flexible on it. And like you, I'm not going to run, through 20, or let's say through 10, I'm just going to cut it. As I said, it's not yet in a macro book. It's an early sort of try. I've been long, on and off long euro probably since US CPI. And on balance, it had worked well. But like you said, we are in this critical breakout area, and there's no confirmation yet.
Yeah, exactly. I guess the only thing to add to that is maybe because we're 6 months away from the Brexit, maybe the euro is going to start to react more to Brexit headlines. And let's face it hasn't really reacted that much, and it's all been the sterling side.
To be honest, I was listening to some of these political editors, commentators, and a few made the point that the EU at the moment is negotiating, as they always do, play hard, play hard, play hard, and last minute they kind of, turn. So and maybe that's part of Theresa's strategy from Friday. Go like, you know what, this is what I've given you. Okay, if you don't like it, tell me what you think it should look like. Or I think what's probably more likely now is this Canada +1 or whatever they call it, like a better trade deal than Canada has.
Yeah.
But along that line, that would probably, if Brussels says checkers is dead, which it looks like it is, then it's probably going to be something like a trade agreement Canada has. And if the government is clever, maybe that's where they should be sort of heading. I still cannot think or hope or pray that the government doesn't think no deal is an option, because I'd be still very scared of that. I think it'd be a disaster.
I'd be an absolute hosing of
Cable 120.
Yeah, easy 120.
Yeah.
That's great stuff. I guess the other final thing on the euro dollar side is we got the CPI, got the Fed. Let's see what happens there. The other thing is the rate path. I think after summer, 15 basis points priced in, but I think it's not, unless they do 25, I think it's not about that first hike, it's the path afterwards.
Yeah.
They've got a way to go. And if they get back on track, if we get a blistering CPI on Friday, and the dollar's taking a few hits here and there, we could get a nice move on euro, because people are going to be going, well, what are they going to be doing? What's the new who's going to be the new Draghi after December? And then you've got, it could be a brand new path.
Yeah.
So I think the Ionia curve is pricing around 15, 20 basis points around that time. It's just after summer, but that could all change. isn't
Yeah.
it?
The one thing I would still throw in there as well, if you talk about the dollar just in general, is this. I know we always bring it up, but I still think it's very important. This is dollar CNH, dollar China.
Absolutely.
So we just hang around this 685. He hasn't really done much, but he hasn't gone up anymore either. So
Yeah.
I
Yeah.
I have like two levels, which is the one on the downside is 682. That's a nice FIBO level. Since dollar China has moved up, we have not managed to get back below there. So if he would suddenly break 682, watch out on the euro top side. Euro could actually just starting to fly. I don't think we're gonna go near 7 anytime soon. I really do think the PBOC has fixed or is capping dollar CNH just ahead of 690, which is
Yeah.
maybe another reason why the euro actually has turned. You know,
Yeah.
I can now be even more cynical and say some of the moves we didn't quite understand in US Treasuries. I really do start to wonder that, let's just say, I can't prove this, of course. Well, let's just
Right.
sort of think outside the box.
Yeah.
If you are going into a trade war with the US, and you know this could sort of last for a while, you have an unpredictable president. No matter what we think, what job he's doing or not, doesn't matter. He's an unpredictable president if you are China, or if you're any other nation for that matter. So, you know, I'm not saying China's going to dump treasuries. They're not going to do that because they're not going to go on a suicide mission. But I just wonder if there's just a gentle shift, smalls in comparison to the treasury market or to the reserves China has. But if they just shift their own 10 billion here or there, and, for example, go into the euro, which they have done in the past, that's maybe just another thing that has nothing to do with macro, nothing to do with data, nothing to do with anything else, but just the question on the dollar as a reserve currency, which, again, I'm not questioning this at this stage, but that small shift from some nations that just start to worry a little bit about US politics or US policies. I just didn't understand some of the moves in the treasury market at all. It didn't make any sense compared to the data we did see. And you just start to put one and one together. And, sometimes as traders, we are too cynical, but many times in my career, actually being cynical is actually what did bring you on to the next story. And I'm not a fixed income guy, and I will do some digging, but there is a number that is always going to get released from the treasury about central bank flows. And maybe it's just worth to dig around a little bit to understand when the next release is coming from the treasury, because I would be very interested indeed to see some of that flow, to see whether China is really shifting. I mean, as I said, they have so many treasuries, they're not going to just dump them. But
They got about 4 trillion or something.
So for me, there's just, if I look across all the markets, there's just something underlying that you just pick up when you're a market person.
Yeah.
You might not be able to explain it, but you just feel it that something is going on. And I'm just wondering if there's just something in that area going on. And like we discussed, I think the last week or the week before, there's a reason the euro has never broken 115. I strongly believe that. We had this odd 113 accident, but that was the Turkey story. I think if we had had Turkey, I don't think we would have seen 113. So there's a reason to 115, and I think you can actually put a name to it. It's PBOC. I'm just guaranteed. I'm so sure of that.
Yeah, because it was near 7. Oh, there was the 113. It was near 7, wasn't it?
Yeah. It was about 698 or something, or 97 or something. Yeah.
Yeah, I mean they as you said to me before, it looks like they're handwriting.
Yeah. No, to be honest, that's one of the advantages when you've been in the market for a long time. When certain things suddenly start to happen, you kind of recognize some of the handwriting. And to me, euro dollar has the handwriting of several wealth funds. written all over it, to be honest. I think we had a window where the euro would probably have gone, you know, after that 114.50 FIBO break, I think we had a fair chance to see 111.80. That would have been the sort of next target, would have probably made sense from US data versus Euro, Fed versus ECB, blah, 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 blah. It would have just sort of suited perfectly. But for the Euro just to resist to go below 115 just makes no sense. And so I think that's another reason why I think we missed the opportunity to take the Euro down. Unless, you know, so we get new news, right? So if like you mentioned, if Italy will come with a budget at 3% GDP, euro dollar is probably going to be 200 points lower, right?
Yeah.
And 10-year BTP is at 350 or whatever. But I think it would need a significant news now to derail the recovery of euro dollar, I feel. I can't believe
on that note, we broke 20, we broke 50. We got a bit of pain back for those longs. You know, I tried to get on that trend last week, and then 145 Theresa May came out, and I was like, well, you know, shouldn't really affect euro dollar, but how wrong I was. So I think we stay above 20. I'm happy, but we could be failing that now. That break from last Thursday.
Yeah. To be honest, I what I often do is when I get sort of, you know, usually I'm going from a short-term position, even if I think it could be a future macro position. It's like what I did on Friday, right? Or on that break, I bought the break at 20, at 50, realize it's probably not going to run away, so I sell at the figure. So I still think that at the early stage, you just deal with a core position. You're not with your 100% risk. And nurse it. So I nurse my average down. So I have a little bit more room to give it a chance, because I want to give it a chance, because I think it's going to be very hard to get long euro if this is really a turn. And so I want to have some euros that just in case that would really happen. And to be honest, if it breaks 10, 20, fine. You know what? You know, I tried it, didn't lose a lot. But I feel like I just want to have a position that could actually be the next trend. That's what I'm looking out for right now.
Yeah. Great stuff, B, as always. And then I've just got a bit of Brexit. I sort of mentioned about we're at the sharp ends. I haven't misspelt that. I got introduced to the Sharpe ratio. I don't know if you've ever sort of dug a bit deeper, but in a broad sense, Sharpe ratio is just a basically, in very basic terms, is you've got to have a fairly high Sharpe ratio, and in general terms, is the risk enough for the reward? And in Brexit, I don't think it is for me. I'm just, you know, unless you're glued to your Squawk and your Bloombers, you know, you can just get taken out. So I would just say pick a pair that's less headliney, and cable's just very tough, especially for new young traders out there.
Oh, yeah.
You know, there are other lovely pairs you can trade apart from cable.
To be honest, I think sterling, I haven't really traded sterling a lot exactly for that reason. The risk reward is not good. The one thing I would say is where sterling sometimes is nice to trade. Let's say the trade I done on Thursday after the press conference from Tusk and all these guys, I just felt, you know what, that looks kind of broken a little bit, and so I didn't have the guts to sell cable because I was just on this sort of dollar mission. So I bought euro sterling, which is sometimes, you know, it's still on the sterling headlines, but sometimes euro sterling can be a little bit better engine to get into. But it then took what, 12 hours to move.
Yeah.
The first 40 pip move, which I sadly already sold out. And this is the one thing I don't understand from the current market. The news was out there 4 o'clock Thursday afternoon, and it took all the way to to lunchtime, more or less, when Theresa May, or 2 o'clock when Theresa spoke, for the market to finally realize, oh yeah, there was this thing that didn't go quite well. But we knew on Thursday, so I'm a bit surprised. But what I wanted to say is, where a sterling trade is nice, always with obviously stop losses in place, is in this whole Brexit process, we had like this sort of, positive Brexit wave for like 2 weeks, about the same as we traded no deal Brexit all summer. So whenever that shifts is the moment for a few quick hit and run trades, tight stop losses, not married to it, not taking a big stand of bullish or bearish. But where sterling was nice to trade is we always traded in sort of blocks of a week or two, where the sentiment come from one end to the other.
Yeah.
And that's why on Thursday, I think, when you suddenly saw that actually no one in Europe liked what Theresa had to say, I mean, that's just very. We already had negative headlines on Wednesday, which were ignored. On Thursday, they were ignored. So I was wondering all week. I said, like, you know what? Everyone says Chequers is dead except for Theresa May. So I couldn't quite figure out, why sterling kept on going. And well, it held my euro, so I wasn't too unhappy about it, but I just couldn't understand. But generally, I agree with you. Sterling, even for seasoned professional, it's literally possible, right? One wrong headline, 100 points gone.
Yeah, bang.
We all don't know where Brexit is gonna end, nor does the government. It's like, how can we know what kind of Brexit we get if even the government of the UK doesn't know, right? And exactly. I think that's all you need to know about sterling, really.
So finally, last but not least, something a bit more calming and mature: the Italian politics.
Oh yeah, very mature.
So I've been digging around. I haven't included this in the topics, but I just feel I've been digging around some of my sources, and we've got, I think, on the 27th, as you know, the Italian budget, and the key thing to keep an eye out is the budget deficit percent of GDP. 2% is where the Europeans would like it. As you mentioned, a few banks, including Danske, were talking about 2 to 2.4%. I think if it's anything above 2.5, there's a sell on euro. As ever, the devil is in the detail, and I've been doing a little bit of digging on the new coalition. They've got large support, but not based on anything concrete policy wise. And I just think this is just breeds a lot of uncertainty, and I just feel that anything can happen. If we're close to 3%, that's just going to be a hosing of euro dollar, because I just it's going to really trouble Draghi and people over there. So I don't think it's going to be that. But the other thing, I mean, that's the key thing to look out for. The other things are, any more change on the VAT. I think they've scrapped it for 2019, but any more talk on that. And then the key thing that kind of got the wobbles when yields went crazy was the doom loop of high sovereign debt and our exposure to Italian banks. So what are your thoughts on that, Pete?
To be honest, I sort of tried to follow it, all this sort of ping pong match they were doing down in Italy, and it looks right now that for 2019 budget they might try to play the rules, as in they're probably not going to stick to the 2%, so I would definitely expect a little bit more than that, 2.2, 2.3, which I'm not yet sure if the market is bothered about it or not. So I'm always watching Italian yields. So to be honest, if I see BTP start to tank, I might just drop, sell my euros and just wait. But I think I was reading over the weekend that some in the alliance are still talking about, they may still look at, the euro exit. Not now, as we know, but they say it's still in their political mandate just to look at all options over time.
Yeah.
So I think this is probably not a story for 2018 or 2019. From the look of it, I think they realize that they want to have some credibility. So I think they probably do not go all in right now to fight with Brussels. I think it's too early. I think they're going to want to pick their fight at the right time, which is probably not right now. So I think we're going to get a budget that probably just is a bit outside the rules, but not too much. So
Yeah.
maybe you get a day of a hiccup, but somehow, I'm not sure why I even think that, but I somehow think the Italians just sort of wiggle through without that Italy is not going to be a topic in 2018 or parts of 2019, at least early 2019. The coalition itself is a bit explosive. So that's why I'm saying I don't want to already talk about the entire 2019 because that coalition could blow up tomorrow, as we know.
Yeah. Yeah.
But I think both realize that, a chance to govern may be not coming around again or quickly. So that's why I think they kind of try to become a little bit of a stable government and then chip away, and then they look at stuff, and if they in a year's time still feel like, what, UK is going out and they kind of manage it, so I don't think because of Brexit, I think the Italians, clever as they are just gonna take a backseat and watch the movie unfold, and depending on how that movie ends, they might actually then draw their own conclusions, at some point in the future. So for some reason, I actually think for once the Italians are going to stick to the rules more or less. It's going to be a bit above 2%, but it's nowhere near 2.5 or higher. I would be shocked to see that.
Okay. Well, no immediate fireworks.
I don't think so.
Yeah. Okay. That's fantastic. Well, that's great, B. And I just want to finally mention for today's My Position, we've actually got a seminar on the 16th and 23rd of October in London, and hopefully Beat's going to be at one or two of them. I'll be there, and basically what that is a taster session of what we do, the Adamus Principle, for our next masterclass, which is the second one we've done. It's on the 7th of November. Contact me or get in touch if you want to know more. I'm on LinkedIn all the time. Just a little bit about the masterclass and the taster sessions you'll get on the 16th and 23rd of October at 6 o'clock in London. It'll be Liverpool Street. Beat's a great guy, and he'll be doing the masterclass. But basically, we teach you how to trade properly, teach you macro, simple steps, give you aftercare, potential 5K funded account. We'll teach you technicals, and we just keep it really simple. That's why I always surround myself with spot guys, because they're pithy, they're spicy, they're real, right? There's no fluff, there's all pith, and that's how I like it, because times a very precious commodity. So the followers I have on LinkedIn, what I'm about, and I'm honoured that Beats doing My Position, and he was there at the last seminar, and I just think it's just going to be a really good one. If you want to know more, ping me or direct message me, or of course you can contact Beat. But the final thing, last but very not least, is Pete does an amazing daily commentary, and I'm not going to bore you with my take on it because I won't do it justice, Bar. So I'm going to hand it over to the rock star he is, Pete.
Thanks very much. Yeah, so basically I'm just doing sort of morning commentary. I send out a few charts, which I think these are the sort of trades I like. It's trade IDs, it's color on the market. I update on some of the news and what they mean. So it's basically just a product I am having, and if you have any interest whatsoever to have maybe a free trial, have a look at it, how the product looks, how the product could help you on the trading, because it's kind of a two ways. For those experienced, they know what the product says. For those less experienced, it's sometimes almost a bit, a helping hand on how to read some of the stuff, some of the news, what we call ourselves as professionals do, or trade with some of the news. So just get in touch with myself or with Patrick, and we can organize a free trial. You have a sniff around, have a look at it, you like it, and then we can talk about how to go forward.
Thanks, Pete. I mean, I've seen it. It's brilliant. It's excellent. And yeah, I just wish I couldn't write it myself. That's how good it is. No, that's brilliant. And, thanks for dropping it. This session is free, and I'm going to be posting it tonight. You don't have to send me your email or whatever. I'm going to be posting it tonight on LinkedIn pre-Asia. Yeah, watch that risk. It's going to be a massive week. And Pete, thank you very much again, mate.
Thanks very much for having me, Patrick.
It's been brilliant. Thank you.
Have a lovely evening.
Have a good one. Cheers, mate.
Take care. See you. Bye.
All right.